American CPA. CPA. KK the CPA.
JJ the CPA here. Hope you're doing well. I want to give you an executive summary of the employee retention tax credit, kind of run through it A to Z. I am going to let you know I've got a playlist with a ton of videos that I've given you a link to in the body of this video. And I have a seminar that you can take. It's over 3 hours of the last seminar that I did for other professionals. And it includes the PowerPoint as well as examples, spreadsheets, Excel spreadsheets, links, and a separate video, actually 2 of them, on how to prepare the Form 941X step by step. It's really meant to be a do-it-yourself seminar. But with this executive summary, also, if you'd like to follow along, in the body of this video is a link to get this executive summary. It'll take you to a web page. You don't have to give me your email address, but you will see a button that says Executive Summary, and you can get this for yourself. So with the Employee Retention Tax Credit, it is not too late to go and get this. What's required is that there are wages that you or your business have paid between March 13th of 2020 through September 30th of 2021, unless you are a recovery startup business. The thing to note here is that even if you got PPP, you can still get ERTC. You just can't use the wages on either program at the same time. So whatever wages you use to get PPP loan forgiveness, well, then you can't use those wages to get ERTC. Now, there is no ordering, meaning in that period, for covered period for PPP, you can move the wages around to use what it makes sense for the PPP loan forgiveness, and you then can use what's left over for the ERTC. With this, I'm going to pull up the executive summary right now. Again, when we're looking at 2020, the credit is 50% of the wages that were paid to employees, and it's up to $10,000 of wages per employee. Now for the entire year, the credit is 50%, so that's a maximum $5,000 credit per employee in 2020. In 2021, the credit is 70%, and it's up to $10,000 per employee of their wages. Now that's quarter by quarter in 2021. First, second, and third quarter, $7,000 max per quarter per employee, puts this at $21,000 max per employee for 2021, unless you are a recovery startup business where you can get that in the fourth quarter. A recovery startup business is a business that came into a trade or business in terms of its activities after February 15th of 2020 and had $1 million or less gross receipts and had a governmental shutdown. Take note that for the definition of qualified wages for the Employee Retention Tax Credit, it includes the employer-paid portion of health insurance. There's 2 major things that come into play, but what I really want you to note here is that this doesn't determine which employees are necessarily included in terms of their classification. What comes into play here is your employer size. So in 2020, if you were 100 or less employees, or in 21, if you were 500 or less employees, then you're considered a small employer. If you're a small employer, you get to include all the wages of all the employees during the period in which you qualify. Wouldn't matter if they worked or not. This means that wages for part-time, temporary, full-time, salaried, non-exempt salaried, exempt salaried, you name it, their wages get to be included if you are a small employer. Here's what's key. In determining your head count, you only look to 2019. So whatever your full-time head count is in 2019, then that determines your head count in 2020 and in 2021. When you're determining that head count in 2019, you only include full-time employees, not full-time equivalents. When we get back to looking at the employer size, if you are over 100 employees in 2020, if you're over 500 employees in 21, then only the wages that were paid to employees that didn't work can be included. Now, this is a refundable credit because you are going back and getting it. So with that being said, whatever you do qualify, you will be able to get money back from the IRS. This is not typically available to more than 50% owners and for the family and spouses of more than 50% owners. Now, if you are a more than 50% owner and you have no living blood relatives, then you can qualify. Sounds weird, but that's how it works. Also, this is not available to the self-employed on the self-employed earnings, but it is available to the self-employed's employees that they paid by W-2. Now, there's two ways to qualify. The first is if there was a governmental order requiring your business to be shut down or partially shut down, then during those exact days of that shutdown, you would then qualify. Again, it'd have to be a governmental order. Typically, that is going to be something that you'd be able to find very easily by Googling it right there in your state and or county or city to see a governmental order. The other way is to have your gross receipts down. So when you're looking to 2020, if your gross receipts are down at least 50% in that quarter compared to the same quarter in 2019, then you qualify for the entire quarter. Now for 2021, if your gross receipts are down at least 20% in any of those quarters, first, second, and third, compared to the same quarter in 2019, then you qualify for that quarter. I do want you to note that you're qualifying both 2020 and 2021 by comparing to the applicable quarter in 2019. Now in 2020, if you qualify in any given quarter, then you automatically qualify for the next quarter in terms of your gross receipts being down 50%. In 21, if you have a quarter in which your gross receipts are not down 20%, there's an alternative method for 21, which is you look to the immediate preceding quarter, and if it is down at least 20%, then that quarter would qualify and you would be able to get the employee retention tax credit for that entire quarter. When you are looking at this, that gross receipts is based on the tax basis in which you are reporting for IRS purposes. If you've not claimed the ERTC, then the only way to do that is to file a Form 941X, which is an amended payroll form. So if you've not already filed 941, then you may not already have employees. Form 1099 independent contractors do not qualify for this. And if you are looking at doing that Form 941X, it's actually pretty straightforward. I covered in my seminar step by step. There's not even that many line items that you complete. When you are then going to file that Form 941X, the only way to get it to the IRS is by snail mail, meaning there's no way to e-file it. It does take some time for that refund to come back. Last thing I want you to note is that when you get the employee retention tax credit, it is a reduction of the deduction of wages. What does that mean? Well, the wages that were used to then achieve this credit, well, those wages have to be reduced by the amount of the credit. And that reduction has to be made in the year in which the wages were deducted. So if you are going back to get a ERTC credit for 2020, then you would need to go back and amend your 2020 tax return and reduce down the wages by the amount of that credit. Same thing for 2021. Again, I've got a seminar, 3 hours, where I flesh this all out. You should check it out. Even if you decide you want to hire somebody, you should be informed on how this works, that you properly will qualify, because you as the employer are the only one that will be responsible for ensuring that this was done properly. All right. Hey, thanks for tuning in. Check out my seminar. Check out my playlist. And then don't you ever forget, you've never met a CPA quite like me. Oh, and by the way, I'd love it if you'd subscribe. All right, you have a great one.
American CPA. CPA.